Good afternoon. It's Sunday, March 23rd, 2025. It's just after 3 p.m. on the East Coast, noon on the left coast. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on Substack and YouTube. Again, if you enjoy this video, if you value my content, if you get value from my content, please hit the like and subscribe button. Excuse me. Getting this voice opened up a bit here on Sunday afternoon. So, a lot to get to, as you can see, the tabs. Let's kind of go back in time, go back to February, and sort of how we got here. You can see the CTA positioning in US equities graphic. Wow, what a drawdown. Reminiscent of a late 2023, another time that the market thought the world was ending, and it wasn't. So we've gone from almost 50 billion net length by CTAs, commodity trading advisors, trend followers, to net short 30 some billion. That's a big swing, and it's characteristic of maybe taking a look at the long side here in equities. Not a bad time to start taking a look, in my opinion. But let's go back to February. Those who subscribe to my Substack know that in February I wrote a few bearish articles. I got increasingly bearish. This one, February 23rd, I really laid out the bearish thesis on equities, why I thought that there were some serious risks in this market and there's cracks showing the economy. This failed breakout in ARKK was a prime example of a market that had just made a blow off top and was extremely vulnerable. There were lots of sectors breaking down from very mature and well established topping patterns, and sure enough, that was what happened. Here's late February, went straight down into mid March. I wrote this on March 4th. What the hell is going on? Just the damage in stocks like Tesla was starting to get really pronounced, and the trend lower in the 10-year Treasury note was also not growth positive. It was sending a very negative message for GDP, essentially, and the strength of the economy. And I just sort of delved into why Trump's first 40 days in office weren't going very well for financial markets, and also why gold was continuing to do well. And again, pretty much spot on here. So let's look at where we are today. Last weekend, I turned positive, basically calling for stocks to rally, to have a little bounce back rally. We got that last week. I think there's some potential for some more upside here this week. So I kind of have one foot out the door, but I'm sticking around here because just sentiment has turned so negative. The searches for recession on Google and on news headlines, the word recession is everywhere. And that's usually a time when you want to start being more contrarian. And, I don't know what's going to happen on April 2nd with the tariffs, but I think there's a chance that it's not quite as bad. It doesn't turn out quite as bad as feared. I think people are bracing for tariff D-Day. And often when something is telegraphed so far in advance, even if it happens, it doesn't turn out to be as bad as feared. So I don't know what's going to happen on April 2nd. I don't think anybody does. It's clearly a negotiating tactic to some extent, but obviously if Canada and Mexico really push back, then Trump's not going to back down, and that wouldn't be good for anybody. But most likely cooler heads will prevail. We will see. It's interesting that Canada, Carney just called for an election April 28th in Canada. That adds another element to the situation where maybe there'll be a little more posturing, ahead of that. I'm not sure. I think I'll talk about that a little later when we talk about the critical minerals. But I basically look. I turned bullish for a trade tactically about a week or so ago. So far, that's right. That's been right. I think a little more upside, a little more juice to squeeze here in this bounce back. So let's stay tactically long here and sort of fade the recession crowd, which it may prove to be true. We may get a recession, but that doesn't mean stocks can't rally for a few more days, right? Um, yeah, and just this washout in CTA net length and the very negative sentiment that's still out there even after last week's little bounce back. I think that is supportive of some more upside here in stocks. So last week we got the FOMC statement, the Powell press conference. I delved into it on my Substack on March 19th. This was a very uncertain statement from the FOMC. The dot plots were very uncertain. They still, the committee members see risks to the upside in inflation and unemployment. Dot plots show 2 rate cuts still to come here in 2025. Market thinks there's a 50% chance of 3 rate cuts. We will see 2 or 3. I'm not sure it matters that much. But the fact that, and this is the point I made in this article, the fact the Fed is still dovish and leaning towards easing with the inflation data trends we've seen in the last few months, well, that tells you a lot. And I think it's very favorable for hard assets. It's very favorable for commodities, and obviously that's part of what we've been seeing, or part of the tailwinds for the gold and copper charts in these incredible rallies that we've seen year to date in those metals. So let's go through some charts here. The S&P, I think, 100 more points of upside. Clearly, there's going to be resistance near 5,800 on the S&P. Clearly, that's going to be a big level. That may stop any bounce back rally in its tracks. But for now, I think there's some more upside, in this snapback rally. But we'll see once it hits that 5,800, 5,850 area. If it stops there and turns lower, then that might just be it, and it's time to go back to the short side again, right? But for now, I think we've got to sort of fade to consensus bearishness here. And ARKK chart is also, this looks like put in a pretty nice tradable low here. And Friday was a very nice candlestick. This chart is looking pretty good. We got a MACD bull cross. I got to get rid of these arrows here, but this looks to me like favorable for some more upside. And it's interesting how Tesla got so obliterated, so extremely oversold a couple weeks ago. And now everybody in the Trump administration is coming out supportive of Tesla. Again, this is also a MACD bull cross. Momentum divergence, bullish momentum divergence there at that low a couple of weeks ago. So Tesla could have some more upside. It could get back up to definitely 260s, maybe even 270s, maybe even 280. Again, a lot of these charts look like they've bottomed and they're favorable for a tradable rally sort of setup here. Treasury yields. So bigger picture, this looks like a big topping pattern in the 10-year Treasury yield. It's forming a little bit of a bear flag here. It might construct this for another week or two. We'll see. But I would expect that Treasury yields are going to break through to the downside, break under that 4.1% level on the 10-year yield later this year, possibly in Q2 even. Just the structural factors with the new administration's policy objectives, the fact they want to get really low energy prices. Yeah, they're definitely pushing down on the long end of the curve, and the fact that they're so calm about the prospects of a recession, they're so calm about little turmoil in the equity markets, well, that just tells me that um, the 10-year Treasury yield is going lower, and even if the Fed does cut rates, well, if they cut because there's a recession, well, the 10-year yield is almost certainly going a lot lower. And if there's no recession and they gradually cut rates and the economy gradually slows a little bit more, well, then the 10-year note yield is going lower as well. At least in the near term, it is. The only way that we sort of get much higher yields is if all the new administration's policy objectives are completed. The sort of deregulation turns out to be very stimulative, tax cuts and what have you turn out to be very stimulative for economic growth. Well, then yields could go higher, right? But for now, I think that the trend is your friend here. That was a major top in yields in January, and it's just a matter of time before that 4.10% level gets taken out to the downside. Copper's incredible strength. They know it has almost everything to do with tariffs, but China appears to be doing a lot better. And just 511 copper price is not indicative of a recession. It's not indicative of a bear market in equities. So another feather in the cap of sort of fading the bearish consensus trade right now on stocks. I think if we're going to call it Dr. Copper and Dr. Copper is right, then you want to actually buy stocks here and fade the recession calls, right? This is an incredible move in copper. It could pull back any day now, but so far this is climbing a wall of worry. This is a beautiful uptrend, and I don't see anything unhealthy about the move in copper. Let's move this gold chart up here. I talked about the era of $3,000 gold. Last week I made a video about it. And, the gold bull market is really well intact. It's very impressive. And pullbacks continue to be bought. I like this note from HSBC that came out a couple of days ago. And basically they're saying what I kind of think as well. And just simply, I think gold can have a correction here. Could it be 5%, 6%, 7%, drop back to 2,900? Sure, that would be very healthy. I kind of feel like it's overdue for one of those moves. But then I go back to the chart and I say, whoa, we had a correction in February. At the end of February, we dropped over $100 an ounce in a couple of days. Maybe we started a new one on Friday. I don't know. But the fundamental case for gold is so strong, and we have Chinese buyers continuing to step into the market. We have Chinese insurance companies who are now potentially a new set of buyers in the gold market. They have not been in the market on the bid, historically, but now they represent a potential large pool of capital and new buying for the yellow metal. I think the Fed's comments last week, just staying on hold, non-committal to rate cuts, although the dot plot show two, they're not set on a time frame. Generally, that's not bullish for gold. But I think you have to dig deeper in the fact that Powell took a dovish tone. It's pretty clear the committee is just waiting for one more data point, and they'll be ready to commit to a rate cut. They stand ready to ease further, right? And so I think the market is forward looking, generally 6 to 9 months ahead, and the gold market is looking forward to Fed rate cuts, more easing, and maybe even the potential of restarting QE. Not anytime soon, but maybe late this year, Q4, maybe early 2026, especially if we do get the recession. You can almost be sure that we will get QE from the Fed. And that's why they've run down their balance sheet a bit, so they have that room to make it bigger again in the future. As far as the gold miners go, um, I made a post yesterday basically saying I wouldn't be surprised if we get a little correction, a little pullback. There's big resistance just overhead in the Huey Gold Bugs Index around the 375 level. We closed at 352 on Friday. So, what is it? It's like 7 to 8% above current levels. That's not a whole lot of room. But we also just broke out from another key level above 325, 327 area. So we're sort of in no man's land here in the gold miners. They could have a little dip, 5 or 6% pullback. I would expect that would be bought. In fact, if we do get a correction here in the next few weeks, I think that could be one of the final or the final opportunity to really load up before this level 375 does get broken and price moves to the upside. And then there's a lot of room to sort of go back and test those 2011 highs in the gold mining sector. Ken Ross, I said just a few weeks ago, I said I love this opportunity to reload here, under the $11 level. I did, and look what happened. Broke out, made a new 52-week high. This sector is in a bull market, so we don't really want to overthink it. But at the same time, if a stock like Barrick pulled back to, let's say, 25 to 25.50 on the TSX, that would still be very healthy, and it would set up a tremendous buying opportunity at support, right? So I don't have a crystal ball, but a correction in my mind would be a gift in the gold mining sector. I notice on X that the Silversqueeze crowd is back and strong this weekend. It's interesting that in the HSBC note, they are not so favorable to silver, and they actually consider tariffs to be a negative for silver. Interesting. Maybe a lot of the silver demand, the consumption has been front loaded here ahead of tariffs, and actually the announcement could actually the announcement and the implementation of tariffs would actually be negative for silver. Food for thought. Again, I'm a gold guy. I stick with gold, keep it simple. Silver tends to follow gold very well, and during really strong bull market phases in precious metals, silver outperforms gold 2 to 1, maybe even sometimes 3 to 1 for short-lived periods of time. But I get a little concerned when I see price start to roll over a little bit, and then all of a sudden there's a big Silversqueeze push on X. The skeptic in me thinks, what's really behind that? What's going on there? And is somebody actually wanting to liquidate, into that retail surge of interest, right? I would not consider a big push in Silversqueeze tweets on X to be an actual bullish indicator for the silver price. That being said, this is a very strong uptrend. And if silver does pull back to, let's say, 32.25, which would be a nice technical support level, that could represent a tremendous buying opportunity. It could be a nice trade setup in the near term. So let's talk about Trump's executive order, because I think this is a big deal. The executive order on critical minerals that was announced Thursday, March 20th. I'll invite you to read it. But the main gist of it is that Trump is invoking the powers vested in him as the president of the United States to support the security of the United States, and basically pointing out the vulnerability of the U.S. Supply chain. The U.S. has underinvested in its mining industry for more than 50 years. Some might even say 100 years, basically since World War II. We've underinvested in our mining industry. China has overinvested in its mining and minerals processing. They have a lot of infrastructure, smelters, and refineries. Every step of the minerals supply chain, China has it. They dominate it. The US is lacking in all the key infrastructure for the mining and processing of critical minerals, right? Um, and he's basically ordering all these federal agencies to take all sorts of actions to support, basically to investigate and then take actions within very short periods of time, 10 days, 15 days, 30 days, just all depending upon the section of this order, to start to mobilize the powers of the federal government and the resources of the United States of America to re-energize critical minerals production and processing in the United States. Okay. So there's a lot to dig into here, but a couple of things that really stood out to me, and I wrote about it on my Substack. They're considering constructing metals, refining and smelting facilities on land managed by the DoD. Now, the DoD has manages over 25 million acres of federal land, and it's up to them to locate suitable areas to build this key infrastructure for the processing of critical minerals. Now, that is a huge game changer. That's really thinking outside the box, because the reason why the US hasn't really built a smelter in like 50 years, and this metals processing, this key, metals processing, this key infrastructure is so scarce in the US, is because it's that I don't want it in my backyard, right? Everybody has the same attitude. I don't want it in my backyard. It's also very energy intensive, so you need to be locked into a robust power grid to build this. Well, a military base has a robust power grid. There's a lot of wide open space on military bases across the US, right? So this is really thinking outside the box. Also, it's interesting that the executive order is not just about copper and nickel and cobalt and rare earth minerals. It also includes uranium, potash, and gold on federal land. So those aren't considered typically to be critical. But I mean, obviously, gold is very important for a lot of reasons, not necessarily for EV batteries or such, but you could say it's critical to the security of the nation. Uranium, obviously, nuclear power plants, that's critical to the security of the nation, and potash for agriculture, right? So all of this kind of makes sense. This order makes a ton of sense. And for somebody in the mining industry, an investor who's been around and understands how this industry works, reading this order was refreshing. It was a breath of fresh air, and the urgency that is injected in this by declaring a national emergency is just, wow, it's shocking, right? The federal government doesn't move fast. I mean, just look at permitting timelines for new mines, right? You're talking about 15, 20, 25 years to build a new mine in the US. So to say, I am ordering within 30 days of the date of this order that these things happen, that's incredible, right? And for junior mining companies, it's interesting. Um, there is a section, let me find it. Yeah, this one here. So the Secretary of Defense, the Secretary of Energy, the Secretary of Agriculture will coordinate with the SBA and head of any other agency that can provide loans, capital assistance, technical assistance, and working capital to domestic mineral production project sponsors to ensure that all private parties who enter into lease and commercial agreements, blah, 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 utilize as many favorable terms and conditions as are available under public assistance programs for these purposes. Wow. So again, harnessing and mobilizing key federal agencies to find ways to support mining project sponsors in the US with capital assistance, technical assistance, and working capital to ensure that these projects have as many favorable terms and conditions as possible under the law. Shocking. Shocking. And again, I delve into this in some detail on my Substack, Goldfinger Capital. But the critical minerals executive order is huge for US mining. And I think that we have to look north of the border now and look at Canada. What are you doing? What is the federal government doing there? Obviously, Canada has flow through because the exploration industry is important for the Canadian economy, especially for different territories, the northern territories like the Yukon, the Northwest Territories, etc. During the summer, very important part of the economy to have junior mining companies doing exploration work, and the flow through incentives really help with that. The US doesn't have flow through. That would be interesting to see if that is contemplated as part of Trump's executive order and these new initiatives. But Canada has the federal government, and the way things have been working in Canada for the last couple of decades, you could say it has been as difficult to permit a new mine, as difficult and costly to permit a new mine in Canada as it has been in the US. So what is Canada going to do now that the US is supporting its mining industry like this, right? Hercules Metals, I made a video on this one for subscribers. So take a look at that if you're interested. That's to paid subscribers on my Substack. Just a few juniors that, or mining stocks, because IAMGOLD is not a junior, but struck my fancy. Newcore Gold, NCAU on the TSXV. This is in Ghana, the Enchi Gold project in Ghana. Look at this chart. I had an interview with the CEO on X last week. We discussed the company. I don't know of a specific catalyst that I can attribute this move to, but it's clear that some new capital has taken a liking to Newcore Gold, and they are buying shares in the open market at an aggressive pace. I don't think there's any reason to overthink this. This is an uptrend. This is a breakout. And this is a company with a lot of momentum, with an expanded drill program in progress. IAMGOLD got an upgrade, a raised price target from CIBC last week from 760 to 840. They'll be reporting Q1 results in about 6 weeks. So that's one to look forward to. Arizona Sonoran. So there are a bunch of U.S. copper junior miners that broke out last week, right? You have ASCU, you have Gunnison in Arizona. Those are both in Arizona. Trilogy in Alaska. Northern Dynasty is another one. And there's even more that I'm not mentioning here, but not so much the early stage junior mining companies. Those, the markets basically say, well, this executive order is not really changing the calculus for you guys yet, but it is potentially changing the equation for the more advanced